Hi everyone, this is Jitan here and welcome to another episode of Traders TV. In the last episode, we talked about the 3 ways to fast track your trading success. Now by the end of today's video, you're going to learn how to build a small trading account, something that I always get questioned during one of our workshops. So let's get to it.
Okay, so let's focus on the different ways you can grow a small-sized trading account. The benefit of trading foreign exchange is the fact that you can start with a relatively low capital size, but that does bring around problems because you're trying to grow something small into something big. And yet, most people are just focused on trading returns. Okay, so let's have a look at the different options available to you. So most people only focus on the first 2 ways. They either risk a lot more per trade or trade higher frequency. So what I mean by that is, let's look at number 1. So most people, when they're first taught to trade, we risk 1% per trade. Keep the risk small, okay? So we can understand how the game is played, we can build the confidence up, and we can protect the downside, because that's by far the most important part of any type of business, is protecting your downside. The upside will take care of itself. However, because some people have a small sized account, we're talking like, anywhere between, I guess, 200 to 500 pounds could be seen as a small sized trading account for most people, okay? So they have, when they're risking 1% a trade, they might make 10% in a month, which is phenomenal. But 10% doesn't seem like a lot of money based on the size of account. However, that is a great place to be, and I'll tell you why in a moment, right? But most people, they have a really good results, yeah, but because they have a small trading account, it doesn't seem like it's enough. So what do? They end up going for 1% and they start risking maybe 10% per trade. So now they only need 10 losing trades before they've wiped out their whole account. You see this happen time and time again. I personally see this happen time and time again. A lot of students that I get, they've already tried to trade for several years. They've tried this, they've tried that, and they've just been losing money. And we get them at the end of their journey when their confidence is at their lowest, and they're a lot more risk averse because they've built up the bad habits. Now that's fine because we can work with that. Yeah, we understand what traders go through because we've been through it ourselves, and we've seen thousands of traders go through the same journey. So we can easily overcome any of those things, but it's important you start the right way because you need to build good habits. Because 1% is a great place to start, but because on a small size trading account doesn't seem like enough, it forces people to over risk. So they start risking 10% per trade. Great if you get it right, but again, are you really protecting your downside? Yeah, in this instance, you're not, because the risk is a little bit too high. With most traders, you've got to start small, build the confidence up, and then start pushing it higher. Another mistake is the fact that people trade higher frequency. So they think, oh, well, I need to be in more trading opportunities. I've made a really good return just trading, 3 times a day, but I need to be in more trades. And they start trading so many other different things, and now they start taking 10 trades per day. Well, 10 trades per day, if they don't go right for you and you're risking 10%, you're wiped out in one day. Now that is not a good business to be in, of course, right? You're not allowing any time for the learning curve. So the answer isn't always going to be to trade higher frequency. Okay? In some cases, when you get a bit more advanced, you might start to scale into a trade because it's going in your favor. You may capitalize on that trend. You certainly can't start off trading like that. Okay, so most people stick to either number 1 or number 2, and the problem with that is that they're not having the right guidance within it. It's okay to gradually increase your risk per trade, but certainly 10% risk is very high. Okay, you need to have a strategic plan on how you're going to actually increase your risk. Also, trading higher frequency isn't necessarily the answer, because the more trades that we're in, the more emotions that we have. So whilst it may seem good, because people are only thinking, as always, they're only thinking about the profits they can make. They're only thinking about the upside reward. They're never thinking about the downside risk. And as I said, if you manage this part of the puzzle, this will take care of itself. Okay. Now there are 2 other options available. You can trade for other people. So if you're consistent and profitable, there's other people out there who would want you to trade their capital, okay? And you can charge a fee for that. So again, trading for other people and finding investors can be two other solutions. Now, when you look at these scenarios, one thing to remember is this. You have to be realistic with where you are in your journey and how you're starting out. It doesn't matter where you're starting out, but you have to have realistic goals. You have to have realistic time frames of what you're looking to do and how you're looking to achieve that. We always sit down with people on a one-to-one basis to work out these specific kind of plans, because everyone's different. Some people are starting with a lot of money, some people are starting with very little money. You know, your circumstances shouldn't define your overall success, right? But you have to be realistic and you have to have a strategic plan around it. Of course, whilst I would never say that throughout your journey you're never going to risk more per trade, you have to do it strategically. So all of these options here, a lot of our traders focus on, but they prove themselves to be consistent and confident. Yeah, all of these solutions require confidence. You're not going to be able to go from risking 1% to even 3% if you're not confident. No way, it's not going to happen. Okay, you're not going to be able to take, more trades per day if you're not confident in the trades you're already taking right now. You're not going to be able to trade for other people and find investors if they feel you're not confident in your own trading and what you do. Okay, so this is really important. Most people want to make a lot of money. Of course, we're all in this game for that reason. But the way you get to that point, it has to be realistic. And the realistic plan is going to be different for every individual, because we're all starting at different places. Okay, so there are ways to grow a small trading account, but you need to have a plan that is suitable for you. And that plan needs to be structured around you building confidence, so then you can then be in a position to strategically start using these kinds of solutions. Okay. Now, I know most people are looking for a specific strategy that is going to get them into a lot more trades and is going to win all the time. And, it just doesn't work like that. It's great if it would. And if anyone promises you that, then, you need to have a red flag and do your due diligence, right? Trading is a business like anything else. Realistic plans, hard work, the right guidance, and the plan to build confidence will get you to the place you need to be. Okay. So hopefully that helps.
So I hope you found that video to be of use. If you're looking for a little bit more extra information and those practical steps on how you can move forward, then click on the link below and attend one of our free Forex trading workshops. In the meantime, stay tuned for the next episode where we're going to be talking about the 4 reasons why you must only trade the trend to start out with. So I look forward to seeing you next time.